Hello and welcome to cryptoTV. I'm your news host Parvati Nirman and let's get into the world of crypto with English News Bulletin. Let's have a look at the headlines first. Polygon unveils Supernet chains, announces $100 million ecosystem fund. Sees Silk Road Bitcoin to clear Ross Ulbricht's $183 million debt. Crypto lender Celsius says its Cell token faces regulatory risk. US sanctions more North Korean-linked wallet over $600 million Ronin hack. Bitcoin leads drop among cryptocurrencies, slip below $40,000. Stripe taps Polygon for payments in USDC starting with Twitter. Nike, RTFKT reveal their first Metaverse sneakers CryptoKicks. BitNile to lend up to $100 million to business backed by Bitcoin. Moving forward to news in detail. Polygon has announced Supernet chains pledging to invest $100 million to attract the development of customizable networks. The tool aims to accelerate blockchain adoption by lowering the barrier of entry for developers who previously used Polygon Edge. On each Supernet, validators will stake Matic tokens on the mainnet before going on to validate the network to ensure a strong security level. Polygon's goal is to bring mass adoption to Web3 as the key to blockchain adoption is to provide a comprehensive range of options for enterprises, Sandeep Nailwal, co-founder Polygon, said in a statement. Silk Road creator Ross Ulbricht will see his $183 million debt wiped out following the seizure of $3 billion in Bitcoin connected to an unnamed Silk Road hacker, according to a court filing. In 2015, Ulbricht was sentenced to life in prison without parole. He was also ordered to pay $183 million in restitution, a figure calculated from the total illegal sales on Silk Road using an exchange rate at the time of each transaction. Court documents in 2020 reveal that the Justice Department seized 69,370 bitcoins from a hacker who moved the trove to a private wallet in April 2013. Ulbricht has been given a surprising reprieve, with the Justice Department making a deal with him in February 2021 that forfeits any claim Ulbricht may have had to the stolen Bitcoin in exchange for the restitution to be repaid once the Bitcoin is sold. There is currently no set date on when the auction for the seized Bitcoin will take place. Crypto Network has disclosed that its rewards token Cell could face regulatory scrutiny and may be considered a risky investment. The move comes after last September, state securities regulator asked Celsius to show that its Celsius Earn program wasn't an unregistered security. Federal regulators are also allegedly looking into Celsius, though it hasn't resulted in a settlement or fine. The crypto lending company has enhanced its risk disclosures messaging recently by marking out a separate section for the high-yield Celsius Earn program, saying that it may be considered a risky investment and highlighting regulatory among the risk. As with other digital assets, Cell is susceptible to a wide variety of risk, including coin thieves, lost keys, irreversible transactions, and failing chains, its disclosure read. The company last week restricted new Earn program signups in the US to accredited investors. The US government is expanding and intensifying its vigilance over North Korean-linked activities in cryptocurrencies. The Treasury Department's Office of Foreign Asset Control on Friday added 3 Ethereum addresses to its sanction list, expanding the list of addresses that the federal government thinks is linked to the theft of around $600 million from the Axie Infinity's Ronin bridge. All the 3 addresses had received substantial transfer of stolen Ether from the originally sanctioned wallet over the past week. The alleged North Korea's Lazarus hacking group has been laundering funds by moving them from a sanctioned address to an intermediary address before transferring the funds to Tornado Cash, a mixer designed to hide the source and destination of funds moved through the service. None of the sanctioned addresses have directly interacted with Tornado Cash. Cryptocurrencies extended decline on Saturday, mirroring investors' waning risk appetite reflected in overnight stock trades. Bitcoin led a drop among digital assets as it slipped below $40,000. Bitcoin has been increasingly showing strong linkages with the moves of the stock market, hurting investors' confidence in performance of digital assets. The Dow fell about 980 points or 2.8% after Federal Reserve Chair Jerome Powell comments about likely aggressive interest rate hikes. The S&P 500 and Nasdaq each dropped more than 2.5% too. All three indexes were in the red for the week, with the Nasdaq sliding almost 4% in past 5 days. The Dow has now fallen for 4 straight weeks, while the S&P 500 and Nasdaq have declined for the past 3 weeks. Bitcoin, the world's largest crypto by market capitalization, dipped below $40,000, the midpoint of 3-month price range. BTC was recently seen trading near $39,600, down over 2.4% in the past 24 hours. Ether, the second largest cryptocurrency, traded below $3,000, down over 1.4% in similar time span. Most alternative cryptocurrencies declined by less than Bitcoin, which analysts say suggests the current pullback in prices could be temporary. Analysts say typically altcoins underperform in market sell-off because of their high risk profile relative to Bitcoin. Payment processor Stripe will use Ethereum scaling platform Polygon in the move that will enable Stripe's customers to pay sellers, freelancers, content creators, and service providers in crypto. Initial payouts will be made using USDC stablecoins native to Polygon's network and through Polygon-compatible wallets. Twitter will be the first company to try out the feature by allowing earnings to be paid out to content creators in crypto for users of the company's monetization products such as ticketed spaces and super follows. Stripe said it will add support for additional rails and payout currencies over time. Crypto exchange FTX is using Stripe to build onboarding and identity verification features. Sneaker and apparel giant Nike and its newly acquired NFT sneaker creator firm RTFKT has finally revealed their first Ethereum NFT sneakers called CryptoKicks, designed specifically for the use in Metaverse. RTFKT revealed digitally wearable CryptoKicks initially via a teaser video on Twitter, which shows how the look of the digital shoes can be altered via collectible skin vials, which can be swapped to enable varying styles. Nike's first CryptoKicks can be opened through RTFKT's MNLTH Ethereum NFTs, which were airdropped for free to holders of RTFKT's valuable CloneX profile picture NFTs and other earlier RTFKT's NFTs in February. Already owners of CryptoKicks NFTs are attempting to resell the Ethereum-based digital sneakers on secondary markets. On OpenSea, the sneakers start at the price of about 5 ETH or over $14,800. That's all for today's news. For daily news and updates of crypto world, don't forget to watch English News Bulletin twice a day only on cryptoTV. I am your news host Parvati Nirman, signing off for now. See you very soon and have a wonderful day.